Well, more news in the banking world today. Reuters is reporting that regulators at the FDIC have asked banks interested in acquiring failed lenders Silicon Valley Bank and Signature Bank to submit bids by tomorrow. The auctions show the FDIC is making a big effort to return the lenders to the private sector.
The FDIC is aiming to sell both banks in their entirety, but offers for parts of the banks could be considered if whole company sales do not happen. The recent collapse of those two banks and turmoil for a large bank overseas, they have a lot of people wondering, is my money safe in the bank? Well, today we asked an expert with Michigan-based Nemis Rush Family Wealth Management about that, and he says they are telling clients that now is not the time for panic or knee-jerk decisions.
I think that's the number one thing, is to not panic, take a step back, and try to understand what's going on and what your risks truly are. The one thing that we are emphasizing for all clients is the best way for them to mitigate their risks as it relates to banks in general, whether they're regional, they're national banks, is to maintain balances that are at or below the FDIC limits.
Let's say you already pulled money out of your savings account and you're wondering what you should do with that cash. That doesn't involve a bank. Nemis says it depends on the individual and what your risk tolerance is.
Everybody's different as far as the risk that they're willing to bear. And there's, the things that we talk about as far as, FDIC insurance coverage, but for some people, the emotional piece of that is perhaps too much. And so what are their options alternatively to bank deposits? I would have them look at things like money market funds or short-term treasury bonds, where you're relying on the federal government and the claims paying ability of the federal government to provide you yield and return on that deposited money, and you have that safety of the federal government as the creditor in that case.
When in doubt, you should reach out to a financial expert if you're looking to put money away and you're nervous about putting it in a smaller regional bank. But remember, the FDIC insures deposits up to $250,000 per depositor. Just make sure the bank is insured. The FDIC does not insure share accounts at credit unions.